So we've heard a lot of talk in the news lately about soft landings and more soft landings. And the truth is, the more you hear about soft landings, the more likely you're not going to get one. My name is Paul Carroll, the CEO and founder of Avion Wealth, an elite wealth management firm here in South Texas. So in this video, we're going to talk about a lot of market concerns that are causing fear to rise. Now keep in mind, just because the market's afraid of these things doesn't mean that every single one of them is going to happen. But markets love to worry if they've got nothing else to do. Right now, what is very real is the end of free money. Interest rates are coming back. This is causing pain in the system. I'm actually going to cut another video explaining why I think it's a good thing in the long term, but in the short term, nobody likes watching their house value come down a little bit, or watching it get harder to get a mortgage, or some of the myriad factors that occur when interest rates solidify, so to speak. So let's look at some of the economic indicators that are causing a little concern. Rising interest rates are causing costs to rise for corporate America. They're like a tax. Stock valuations are sensitive to what's known as the yield gap, the spread between what a 10-year bond would pay in interest and the yield that a stock pays. That gap is getting awfully tight right now. The strong US dollar is normally a good thing, but it is causing strain on exporters. Strong US dollar means imports are cheaper, exports are more expensive for our customers. There's concern about the government debt. At 7% of GDP, government spending is out of control. Something's got to give. There's not a lot of discretionary room, so not only has spending got to get under control, but taxes have got to go up. There's no way you're going to close the gap without that. And that's a great way to not get elected. There are unemployment risks in the system. United Auto Workers has a very vocal strike going on out there. Those companies that have acquiesced to very strong pay raises are now struggling in some cases to meet the cash flow demands imposed by those raises. United Auto Workers is afraid of a number of things. They're afraid of not keeping up, but they're also afraid of electric vehicles. It takes a lot less man hours to build an electric car than a traditional car, and that's largely because of the motor. There are global economic factors. Oil prices were above $95 a barrel, but we've just seen the last week how fast that can change, as they've already come back to 85. As I've said many times before, the cure for high prices is high prices, and we've just seen that again. There's also concern that China's domestic economic problems are going to spill over to the rest of the world. China's having significant problems internally. You've probably heard more than enough about them. But those problems are not going to be isolated. They're a huge consumer for the United States. COVID-19 benefited all the economies in terms of government printing money. That money press has been shut down somewhat, but the savings lingered. It looks like finally the last of the COVID savings have been spent down this summer. I think on a longer scale, though, what we're seeing globally is this reintroduction of nationalistic industrial policy, tariffs, boundaries, borders, economic borders I'm talking about here, not so much labor borders. And historically, we know what every economist knows. They don't work. They punish the people who are most hoping to benefit, and that is the lower income. They basically transfer those higher costs onto the domestic market while simultaneously making that domestic industry less and less competitive until they reach a point, and this is already true in many countries, where that industry cannot survive without protections. We went through this with the auto manufacturers back in the 60s and 70s, and it seems that this generation policymakers today has completely forgotten those lessons as we restart this nationalistic industrial policy. And it's not even partisan. What I find surprising about politics today is when you get outside of the culture wars, they don't really disagree on a whole lot. Congressional challenges, I just kind of alluded to them. Congress isn't going to want to make the cuts. be they spending cuts or tax increases, that are going to be needed to get this deficit under control. And when I say Congress, I'm not blaming any one team. Congress in general knows that's not how you get elected. From an investment portfolio point of view, how do we act? If we ducked out of the market every time something negative hit the press, we'd never be in the market. We'd be in cash. Sometimes that's good. Oftentimes it's not, especially not in an inflationary environment. The thing is, whether or not we get a soft landing or a hard landing, we need to diversify in such a way to protect our clients' wealth. Return on investment is not as important as return off investment. And that is what we're focused at Avion Wealth. We wish you the best of investing success.